Truly, in 2008, when the big collapse hit, a lot of insurance companies owned residential mortgage-backed securities, which is what was a big piece of that collapse. So both GAAP, generally accepted accounting principles, and statutory accounting came up with a temporary rule that said, for now, if your executives will swear that they're going to hold these investments out to maturity, we're going to let you leave it at the higher of cost or market. So if the market values drop, we'll see that, but we won't make you write down to that. I call it mark to make believe. Whatever the bond is worth at a given moment, that ought to be what its value is, because when it's time to pay claims, you got to be able to sell it, right?
That's correct.
So what's so frustrating to me is they can take the higher risk, less liquid stuff, push it down into the insurance company, and leave it at whatever value it's at. So you have to admit that's tempting. If I was a private equity executive and I was more interested in profits than policyholders, I'd be tempted, right?
And what you're saying, and maybe this is not what you're saying, but I'm trying to connect the dots here, is the policyholders without consenting are taking on more risk by definition.
Excellent
But
point.
but their upside is capped because
Right.
it's through insurance or annuities.
Mhm.
And so you take an private equity executive or company and they're saying, "Oh, this is perfect. We're looking at the insurance company as a fixed low-cost loan that we can use to create massive upside, and we don't necessarily have to share a ton in that, because let's say we have to, whether it's an annuity or life insurance, we just have to, like, cover what they would be getting on treasuries. Anything else we can profit, but then ultimately, if these things go down, the insurance company goes down. Hence, the policyholders don't get. So how is that legal? Because I understand where the reinsurance idea, I understand how that's possible. I mean, I
Mhm.
don't agree with it, but it's like I understand how that works. Are they then buying private credit through these reinsurance companies, or how are they legally able to take treasuries and AAA bonds and swap them out with private credit that has maybe higher upside but greater risk?
Remember, I started by saying the private equity group from day one is the investment manager. So Apollo in the case of Athene, KKR in the case of,
And you're saying they're regulated differently than,
well,
because it's my understanding that there's really strict regulations on what you can invest in with an insurance company.
there are very strict rules
Yep.
that are being ignored.
Oh,
Yeah. There there are really good rules that limit, say, investments in your own affiliated paper for a really good reason. But the companies it's skyrocketing. I don't know why the state regulators aren't saying you've now far exceeded your limit. None of them are.
I wanna get your take on AM Best and Comdex score. Just curious, like, when we look at a lot of these insurance companies, a lot of them have pretty good AM Best ratings, pretty decent Comdex scores. How much does that matter to you in your seat when you look at companies, their books, and then you look at their their ratings?
That's a tough one. I mean, really, it's a tough question. There are good rating agencies, and I'm sure there are times they give good scores, good ratings. But I use the source document always. The only source document is that sworn statutory statement. I cannot reconcile from the ratings I'm seeing with the underlying financials that I know I can count on,
Yep.
right? And so I'm not sure. There have been articles recently about some of the rating agencies perhaps not doing an adequate job. I believe there have been instances where rating agencies certain ones have actually been paid to give a better rating than the company deserves. All I know is that I can't explain when a company has an A plus and I read their books, very deep dive risk analysis, and I see it as maybe a B plus at best. I don't know.